Malaysia achieved its highest ever trade value from January to July 2024, marking a historic milestone for the nation. In the next half an hour, we'll uncover the key factors driving this exceptional growth and explore what it signifies for Malaysia's economic future. I'm Zahir Calvinong Abdullah, and this is Money Matters. Hello there, good evening and welcome to your favorite channel, TV3, where you can also stream Money Matters on Tonton. Today we have a fellow Institut Masa, Depan, Malaysia, Dr. Shankaran Nambiar, with me right here in the studios. Welcome to Money Matters, Doctor.
Thanks so much for having me on the show, Kelvin.
It's a pleasure having you with us. Now, on August 19, the government announced that Malaysia's January to July trade in 2024 grew by 9.8% year-on-year to hit 1.652 trillion, the highest value recorded for the period. Now, looking into the trade factors here, what are the primary factors driving Malaysia's record trade value of 255.88 billion for January to July, the highest ever for this period?
I think it's been a spectacular period. Things were improving in the first quarter, and they really picked up in the second quarter. And if you look at the background, you find that there was an overall sense of optimism. Households were doing well, consumption was doing well. I think government investment was also, government expenditure wasn't too bad, and of course, investment was good, and of course, trade was simply spectacular. Mm-hmm. And it comes on the back of very solid performance from all these sectors, actually. You had very good performance from the agriculture sector. Manufacturing posted very positive results. I can't really think of a sector that wasn't doing too well. And of course, palm oil was very strongly behind trade, was very much in demand, and the same can be said for manufacturing, mining, which is oil and LNG, liquid natural gas. So overall, you had a very strong, very positive picture with all the sectors contributing in almost equal measure. Mm-hmm.
But do you think the weakened ringgit helped in this, or was it a hindrance?
I think it did help, and probably might have been a little bit of a hindrance. It might have been a little bit of a hindrance as far as the import of food items was concerned, of vegetables, fruits, etc. Mm-hmm. That might have been a bit of a problem. But I think it certainly, I think, did help with manufactured goods. I'm sure it helped quite a bit with the export from the E&E sector, mm-hmm. From machines, equipment, etc. I think a weak ringgit did quite a bit to boost exports in these areas. So I think it was a bit mixed, but the benefits, I think, outweighed the cost of, for instance, the cost of higher food imports.
Right, okay. Now, moving on to how does Malaysia record trade value align with its broader economic strategy and the goal of achieving Bank Negara Malaysia's GDP forecast of 4 to 5% for this year?
I am normally kind of rather reluctant to to be terribly optimistic. But I simply can't help it. I mean, I've looked at all the numbers. I think the numbers, all of them post a very encouraging picture. And I think we are very much within Bank Negara's target. Bank Negara, I think, have been very clever. They've set themselves a pretty lower bound of 4%, which they definitely are going to achieve, and the upper bound is 5%. I don't think that there's a problem at all getting there. Trade has been excellent. The first half, I expect it would be it would remain strong in the second half too. So no doubts at all about falling within that range of 4 to 5%. My guess is we're going to get closer to 5 than to 4.
Okay, but some analysts have also said that the figures that Bank Negara gave for the GDP forecast was quite conservative. So they're saying that there's a possibility that it could even go above 5.
I think very likely. I wouldn't at all be surprised if we say hit 5.1, 5.2%. I think that's very possible. And I think that's very possible because of what's happening, for instance, in the E&E sector, electrical and electronic sector. I see that sector as growing. And I see that sector is going to generate quite a lot of demand, especially as it comes from the rest of the world. There's been a lot of anticipation on generative AI, etc. And I think that's going to drive demand for the electronic sector. Also, I think palm oil, there have been a couple of glitches here and there, which work to Malaysia's favor. For instance, there has been a shortage, and I think the situation has been pretty good in Malaysia. We, for instance, have gotten over the labor shortage problem. It's kind of been resolved, so I don't think production is going to be much of an issue. It's going to be rather smooth. Demand has picked up from Pakistan, India, China. So palm oil and related products are also going to post good results in the months ahead.
Right. What does the simultaneous growth in exports by 12.3% and imports by 25.4% in July reveal about Malaysia's economic conditions?
At first glance, it might appear worrying in the sense that you have a much faster growth in imports than in exports. I think exports increase something like 5% and imports probably 15 or 15.5%, grew by 15.5%. Take note that in spite of that, we still did manage to post a surplus, which means exports were still exceeded imports. And what we do have to keep in mind is that this has been a phenomenon, a continuous kind of theme in our trade patterns. We've always, they've gone along. Whenever you have had an increase in exports, you've also had an increase in imports. So, once again, nothing to worry about.
Okay. Dr. Nambiar, hold that thought. We've just got to go for a very quick commercial break. We're talking to Dr. Nambiar, fellow from the Institut Masa, Depan, Malaysia. Oh, Masa. Stay with us. Welcome back to Money Matters. We're talking to fellow from the Institut Masa, Depan, Malaysia, Masa, Dr. Shankaran Nambiar. Continuing where we left off, Doctor. Now, how does Malaysia's record trade surplus of 72.52 billion year to date influence investor confidence in the country?
I think it would influence in a number of ways. I mean, first of all, you have very strong surplus, and that itself is something that is desirable in and of itself. It, of course, boosts your GDP. It shows that you are competitive, that you still matter in the trade world, and usually when you have good trade, it's indicative of a very, very positive environment, which would also, therefore, normally attract investment, FDI. And with all of these factors going, I think investors see, they would see potential, they would see the ringgit, for instance, strengthening, and if that has been a concern, you would find that that is sort of being resolved with a strong surplus. Of course, the ringgit strengthens. So all these factors, I think, put together, do tend to suggest that the economy is getting more vibrant. And of course, when, for instance, the electronic sector is doing better, or for instance, when the metal industry or parts, equipment, all these sectors are doing better, I think you would find that a lot of the SMEs would also be benefiting from all of this. So you would have SME growth, and that would spur employment. So all round, you're likely to have a more vibrant economy coming up, which of course is going to be something that investors would find attractive.
Right. So it's interesting that you talk about the SME industry, because as you know, there were a lot of reports saying that they were the worst hit during COVID. So do you think the bounce back is there now because of the growing economy?
Oh, yes, definitely. I think the potential is there, and I think they are taking advantage of the potential. So I think it's more than potential. And when you have things working, for instance, when the electrical sector or the electronic sector is doing well, it's not just the MNCs that are doing well. They, of course, need to outsource. They need to get the distributors going. They need to, the vendors get more jobs, etc. So you find that the entire SME complex, which is built around these industries, all of them would be doing a lot better.
Okay.
So there is going to be more growth that is going to be shared within the economy.
Right. So moving on to now, how does Malaysia's 9.8% year-to-date trade growth compare with the World Trade Organization's forecasts of 2.6% global trade increase for the year?
I think they have disaggregated it. You have, as you said, an overall of 2.6. You probably have, if I remember rightly, something like 1.7 for developed economies. And you have, I think, something like 4.4% that's expected for emerging and developing economies. So we fall within that category. I think we would probably be ahead of that, the emerging category. We likely to do better than the average. And given the fact that some of the factors that we were slightly unsure of are turning out quite well. That definitely bodes well for us. For instance, there was concern about China. There was talk that China might face a property collapse and a slowdown in the economy. None of that is happening. Actually, growth in China is doing pretty well. Expected to hit something like 5%. So that's going to be a big boost for us. China is our biggest trade partner, so we're going to benefit from that. The US also hasn't been doing too badly, which is also going to be to our advantage.
Right. What potential risks could threaten Malaysia's ability to sustain its historic trade surplus of 6.42 billion and overall trade performance?
I think aside from the risks that I have mentioned, I think perhaps if there were very bad implementation of our projects, of the policies, that could be a bit of a problem. If we fail to execute, for instance, the policies that we're putting in place to attract FDI, that could be a bit of a problem. But I otherwise, aside from the factors that I have mentioned, I don't see too many issues that could contribute to our downside risks.
Right. Dr. Nambiar, we've just got to go for a final break. Stay with us. We're talking to Dr. Shankaran Nambiar, fellow from Masa. So stay with us. Welcome back to Money Matters. We're talking to Dr. Nambiar from Masa. Now, Doctor, how might the historic trade performance with imports increasing by 15.5% year to date affect domestic sectors such as manufacturing and services?
Ideally, it would, as I mentioned earlier on, when we have exports, traditionally we've seen that imports also rise. And stands to reason because you need inputs in order to make those exports. In the case of Malaysia, you see that there are a lot of inputs, intermediate products that have to be imported to make the exports possible. Many of these inputs we are not able to produce ourselves. For instance, if you look at the trade figures, you find that we're exporting lots of chips, but then if you look at the import figures, you also find that we're importing lots of chips, which quite easily, which obviously means that you need certain kinds of chips at a certain level in order to add value to it and then export it, sell it. Ideally, it would be good if a lot of these inputs, intermediate products, could be produced locally. And if that happened, then you would find that we'd be making a lot more from our exports. We are some distance from achieving that. And I think, for instance, in the semicon industry, we are some distance from achieving that. But I think there are other areas in which it is possible, it's feasible. But in any case, I think we should try to work towards it so that the gap between imports and exports can be closed, so that you don't have such a big rise in imports every time you want to export more. Mm-hmm. So I think that's, yes, obviously something that needs work on.
Right. So now, what policy adjustments should Malaysia consider to build on the record trade performance and address global geopolitical tensions and uncertainties?
I think given the current state of the world, that there's a lot of concern over the kind of role that markets have, the role that they play. That there are also concerns about competition, and my greatest fear, of course, is that countries are starting to roll back on this question of leaving markets open, having free competition, etc. States are beginning to carve off areas, and it's getting slightly interventionist. I think that tendency, we have to hold back on that tendency, and we have to get into a more multilateral framework. We have to push for that. Mm-hmm. And I think the fact that Malaysia is going to be chair of ASEAN next year would be a very good platform to emphasize the need for multilateralism, for more trade. We'd also have to trade with vibrant partners, probably look at other partners that we could possibly trade with, and maybe step up our trade with existing partners. So, for instance, we have, I'm mentioning this simply because Prime Minister has been to India. Mm-hmm. We have a trade agreement with them. I'm not sure if we've explored it to its fullest. They're moving ahead in a number of areas. For instance, they're picking up on hardware, they're getting more seriously, or trying to get more seriously into the semicon industry. Mm-hmm. Probably that's an area, or areas such as that are areas in which Malaysia could collaborate with India.
Right.
And that's an example. We could replicate this elsewhere too.
Right. Final question, Doctor. What strategic measures should Malaysia adopt to maintain and enhance its record trade performance and leverage the positive economic outlook?
I think one of the things that we have to look at, and have to look at seriously, is to facilitate trade. We've done quite a bit, but there's, I think, a lot more that can be done. When you talk to businesses, they keep making comparisons between Malaysia and Singapore, for instance. Not something that we're terribly keen to hear, but I think there are lessons that we can hear. We have to reduce regulatory burden. We have to make it easier for businesses to trade. A lot of companies complain that customs procedures are long. The same you have a particular procedure in one state, a different procedure in another state. I think all these can be ironed out. And I think, of course, the guys I think at MIDA are doing a terrific job, but I think they need to keep up with what is happening around the globe. For instance, there are lots of new industries that are coming up, and I think we should put our foot forward in order to make Malaysia the hub for these industries. And I think if we did that, we'd be doing a lot better as far as our trade performance is concerned. Not that it has been dull or lackluster.
Dr. Nambiar, thank you very much for appearing on Money Matters. It's been a pleasure having you with us.
Pleasure has been mine, Kelvin.
Thank you. Now, for the past half an hour, you've been with us on Money Matters. If you missed the earlier part of this episode, you can also catch it up on Tonton. I'm Zahir Kelvin Abdullah. Thank you for watching and have a great weekend.